Dubai, or more accurately UAE, has been a long-term tax haven. It's been a place where you could have 0% corporate tax, 0% personal tax. Until a few years ago, there was no VAT, now there's 5%. And there are some changes coming. They're coming out at the start of June, in June, I guess, 2023. And you've probably heard about the 9% corporate tax that is coming in, but there are a bunch of other ones that are a bunch of other rules that I am going to talk to you about today. And then I'll give you some possibilities of alternatives, because you may find that this is something that works out maybe a little bit worse for you than it did in the past. Now, if you're still moving to UAE, then that might be perfectly fine. You may be able to benefit from it. Although I'm going to talk a little bit about possible restrictions and gotchas that they maybe bring in that regard as well. So stick around, we're going to cover all of those things today. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Thank you for joining us. If you are new here, I am Michael from Offshore Citizen, and we are global, international, cross-border, multi-jurisdiction international tax experts, as well as relocation, immigration, residency, citizenship, etc. So if you're interested at all in how to optimize your global tax, if you're interested in relocating abroad, figuring out how to have a plan B, protect your assets, etc., please check out some of our other videos, but also reach out to us. You can book a call with me to get personalized advice so we identify the solution that is specifically the best for you. You can book a call at calendly.com/Michael-Rosmer. There's a link in the description below, or you can send a message through offshorecitizen.net. Okay, so as I mentioned, there is 9% corporate tax coming in. People have been talking about that for the last year. That's nothing new. However, we're getting more and more details about the implementation on this. Now, when they announced it, there was lots of talk saying, listen, there's going to be some carve-outs for free zones, etc. You're not going to have to pay taxes, and there's some truth to that. There's some of the details that are still coming out, so it's not exactly clear on how it will go, and there are definitely some tricks that a person could use to optimize. But I think it's worth focusing on two different sides. One are the side for people who are not planning on living in UAE and thinking about setting up a UAE company. The others are those who are going to live in UAE and going to want to set up a UAE company. So both of those we're going to talk about today. Now, on the side of those who are wanting to set up a UAE company from abroad, you're probably going to find that the costs are going to go up. In fact, the costs are already going up. I've noticed this with some of the free zone providers. In addition to this, you will be required regardless to register for income tax, even if you don't have to pay it. So that's going to be part of it. You're going to have to do bookkeeping, which you didn't have to do before. I mean, one of the advantages was just the ability to not register or file anything. What a great situation. That situation is going away. And so the cost of maintaining a company, the kind of hassle of the maintenance, etc., is going to increase. Now, maybe you had to do that for your home country anyway, and as a result, for CFC rule purposes or whatever, this is not going to be a big deal that's going to negatively affect you. However, it's something that you should keep in mind. However, the one that I think causes much more issue for foreigners is they're looking at more strict substance requirements. They kind of started to bring in substance requirements a few years ago. That's sort of the trend. And I've been talking about this since, I don't know, like 5, 6, 7 years ago or something like that, that this was the trend that we would be moving in. Well, now they're officially formally doing it, and there may be consequences if you don't have the substance locally. And they haven't nailed down exactly what that's going to look like, but it is something that may make UAE a less attractive place to form a company if you aren't actually living in UAE, in which case, meeting the substance requirements isn't so difficult, right? The other side of it is for people who are living in UAE. Now, if you just kind of think about this, you can say, all right, well, you're going to live in UAE, you're going to have zero personal tax, that's going to remain, so that's great. Company, maybe zero tax. There's, depending on your activities, where you form, etc., there's some reasonable chance of that, although there are some uncertainties on certain activities, so that's something to be aware of. Again, you're going to have to go through the hassle of maintaining the company. I'm going to give you guys some stuff in another video talking about how exactly to avoid all that hassle, which will hopefully make your life a little bit better. But again, you may have substance requirements. However, the thing that I think is really much more, we'll call it crazy, is you're going to be in a situation where write-offs are not quite as generous as you might think. So for example, if I was to compare Canada to Hong Kong, In Canada, you can write off 50% of business lunches. In Hong Kong, you can write off 100% of the flowers for your wife. It's very permissive. In the case of UAE, they're basically going with the system kind of like Canada, where they're saying, look, you can write off up to 50%. So that's going to make it a little bit less attractive. Now, you might say, okay, well, maybe you can pay out money to yourself, and then you can pay for the expenses personally. Yeah, up to a point. However, if you're having employees who are doing it, then you're not able to write it off. So there's definitely some limitations there that are just frankly less attractive than they were in the past. So that's worth noting. The big one, though, is you could potentially do two key things to get around the taxes. The first one is just pay yourself out a salary. Now, the first basically 100,000 US dollars is tax-free anyway in the company, so you don't have to worry about that. Number two, you're in a situation where when you go above that, you could pay yourself salaries, and that salary isn't taxable personally, so no big deal, right? Nice little improvement there. However, they are saying that there are going to be limitations on how much you can do that. So whether it's you and your spouse, your kids, etc., maybe you can piece together $1 million a year or whatever it is of allowable income. I would suggest to people to amp up their income in advance so that it seems normal that you're paying this. Now, there's tricks that you'll be able to do to work around this, and they haven't said what the limitations will be, but there will be some sort of a reasonable threshold of just how much you can pay yourself. You're not going to be able to come in and say, okay, great, I'm paying myself $5 million a year in all likelihood without creating some issues. The other one that's an issue is you could hypothetically set up a foreign company, have the foreign company make the money, and just pay yourself dividends from abroad. Again, personal income, not taxable, no big deal there. Capital gains, not taxable, no big deal there. In fact, personal income in general, whether it's foreign or not a big deal. However, they are bringing in management control rules. So I've talked about this a bunch of times. It's one of the most common questions that I get is people will ask me, Michael, where should I set up my company? Where should I go? Where should the trust be, etc.? And I always tell you, it's the wrong question to ask. You're basically sitting down and saying, hey, Michael, should I use a screwdriver or a hammer or a saw? It's like, well, it depends what you're trying to do. It depends what material you're working with, et cetera. So in a similar regard, what you want is you want to figure out what are the rules and then figure out what are the tools that you can use to work around the rules based on trying to get from your current situation to your objectives. That is the way to properly structure and plan the best solution for you, which unfortunately most people don't really understand. The key thing here is that companies are taxed based on their place of residency, not based on their place of registration. And typically, in a lot of the world, a company is considered resident where it is managed and controlled. Now, if you don't have that in UAE, well, then you can have a foreign company, and the foreign company can do its thing and make its money and just pay you out from abroad, and no big deal. But because they're implementing management control rules, this will mean that you'll have to worry about the possible UAE tax on your foreign company. Now, maybe this works out well, right? Maybe under a tiebreaker rule, under tax treaties or something, this means that a foreign company that would normally be taxed higher will only be taxed at 9%. 9% is one of the lowest in the world, so that's legitimate. But I think this is definitely making it less attractive for people in this regard. Now, in spite of this, you might say, okay, well, are you still bullish on Dubai? I'm incredibly bullish on Dubai, still, regardless of this. I do think that essentially what they're doing is they're realizing that there's an opportunity for them to take advantage of some extra income and also try to clean up their international reputation, which is obviously they want to have a view that they're not going to get blacklisted and all this other kind of stuff, which is difficult for them. So, they're walking a delicate rope. I do think they're super smart, and so they will plan in some not so overt loopholes into the system that will allow a person to optimize. And certainly there will be ways that you can utilize a foreign company and use that foreign company to optimize your tax locally. There will be things that you can do playing around with local companies because of the fact that your personal income is tax-free, that if you live in the country, you will probably almost certainly end up in a tax-free environment unless you're running if you're running a restaurant or something like that. That's maybe a little bit different. But this being said, certainly the costs of doing this are going up. And I think that's part of the big deal for them is kind of being able to extract a little bit more. Hopefully this is going to mean that there's some more efficiency that comes in and you bring some competition into the market between different providers. But so far I have noticed prices going up. So anyway, This brings the question of, well, if not UAE, where? And the reality is, I mean, look, UAE has just outrageously good quality of life. It's really, really difficult to compete with some place like Dubai. This being said, Thailand now has some really interesting things. I'll tell you guys in a future video about some little hacks around the long-term visa, which normally the long-term residency permit is not very attractive at all, really difficult to qualify for, but there's some hacks around there, so that's an interesting possibility. There are some interesting possibilities for people who want to look at Bahrain. There are some other countries that have exclusions on foreign income that people are not aware of that I will talk about in some future videos. And you're in a situation where you've got, again, still places like Cyprus and various different islands and other places like that that either have tax benefits or else you're able to get some sort of ways of working around it. And that kind of gives some added lifestyle flexibility. So I'm still super, super positive on UAE. I'm going to still continue to live in UAE probably for many, many years. However, in that regard, I do think that people who are coming need to be aware that if you go the traditional route, the costs may be going up. And in a future video, I will tell you how to make the costs go down compared to what they were before. So stay tuned for that. Anyway, hope that helps. If you want help, again, please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. Happy to find out about your specific situation and give you the best solution. And check out some of our other videos, and I will see you soon.